Hey traders, welcome back to Forex Horizon, the channel where we're transforming knowledge into profits. On today's video, we'll be tackling one of the most important aspects in trading: how to set up the stop losses and taking the profits using one of the key area trading strategy. This strategy is so important that it can help you to maximize your profits and help you also to secure your capital. So for this video, I am not a financial advisor, but it's for educational purposes only. So I'm just sharing the ideas how you can maximize your profits and secure your capital. Make sure that you don't go anywhere. Watch the video until the end.
Welcome back, traders. Now we are going to start by the definition of the key areas. What do we mean by trading the key areas? In trading, key areas are the significant levels on the chart where the price is likely to be. This could be your support or resistance zones, the trend lines, psychological price levels. Understanding these areas can be essential because they will help you to determine where you can enter or exit your trades more effectively. So I will just quickly look at key areas. So let's mark it together. And right now you can see I'm on Euro USD already on daily time frame because I'm a day trader. So I will start on daily time frame. But if you want to see the overview of the market or the trend, you can also start from the weekly time frame. We'll be just looking at the key areas where the price got most of the rejection or it has been rejected in most areas. We can also look at the trend lines. Right now I am on weekly time frame, so I can even move to daily time frame because I don't want to go far from our current price. So I don't want to be looking at the old history like 2021, so of which we are in 2024. It's been like 3 years in between, so I'm just looking at the current price. So we'll just be focusing on that. Remember, it can be the support or resistance zones. You can use also the trend line. It doesn't really mean to be only the horizontal line. If you feel like you want to use the rectangle, you can also pull on the rectangle because with the rectangle it can cover most of the area. It's not like when you're drawing a line, so the box can cover most of the areas. Alright, so let me move to 1 hour. Looking at our charts, this is 1 hour time frame. We will also be drawing the significant areas, mark our key areas again. So one thing I like about the rectangle is that you will be covering the most of areas. Looking on hourly time frame, I'll just be analyzing, and then on 15 minutes, that's where I'll be looking up for my entries. So if you're looking up for setting up the stop loss, then for example, let's say you just see the price just came here where it was our resistance area and price break it, come back, ignore support, and then it plays around here. From there it went all the way up. So now the price has been failing to break out this area here, and you just want to take a trade. So what you can do is just to set up your stop loss below this key area. Looking at the candlesticks here, so you see we have the strong support zone here that the price has failed to break it. It broke above, come back, but it couldn't break it down, and then it came back again, it failed to break it down. Look at the candlesticks that were showing there after the rejection. You can see that they are showing that the buyers are coming in strong force, so that means you can start looking up for, so your stop loss will be below, and then you can see this mini area here. So once the price passes this level, because it tried to go up from here but it failed and then came back down, so once the price passes this area, then you can start looking up for your buy. So if you want to use the risk reward ratio tool here, that's where you can just buy. Always pay attention, guys. Give your stop loss a room to breathe, and always aim at least 1:2 risk reward ratio, meaning for every dollar that you risk, you aim at least to make $2 in profits. So a solid risk reward ratio is very important for long term. You can be successful in your trading journey. Guys, while still on setting up your stop losses using the key areas, please bear in mind that the market volatility plays a big role. So before you can start trading, just look at your calendar. You can go to the Forex Factory. Here is my Forex Factory. Check what are the events. Is there any news before you can just place your trades or setting up the stop losses, so that you know that at this time there are news that are coming in and you can just save yourself and be out of the trade, or you can just give a room to your stop loss that even if the spikes come in, you will not be stuck out. The goal is to protect your trade while you're giving it a room to breathe. So like example, here you see where our entry is, and then we have given our trade a room to breathe. So if the price comes down here, there's still breathing room. That's okay. If there's spikes or anything, then you will not be stuck out easily. The next up is setting up your take profit. So this one, it's right connects us to trade, and we don't want to bear the losses, no. But you know, the losses is part of the game, but taking the profits when your TP hits, your take profit target has been met, you are the happy trader, and it builds up the confidence. Like now we have talked about the stop loss here, and our next key area here, you can see that the price was here and then got rejection, and then here rejected. So where is the next? And then here again you can see we have the rejection. But if we are moving from this level here, because also at this area here you can see we have the key area as well. So if we took our buy here, then the next target, it should be the next key level. So if you want to extend it again to the next key level, we can even bring it up here to the highest. So you can even make it 1:3 reward or 1:2. It is up to you, you know. This allows you to capture most of the move before the market potentially turns against you. So you can see from, let me just bring this one down here. Look at this one. You see the market came and then moved up and then again, but look what is happening here. A lot of noise. So before the noise and before maybe the market comes and the rest, then you'll already be able to look. It is up to you, because also you need to look at other key factors, what is happening in the market. So if there's news, or you can see that, okay, then the market is moving in a direction, you can just trade your stop loss and bring it to break even. If you're looking at for selling opportunities, you can see that the market sold from here. Look at this area when it gave multiple candlestick rejections and then came to this level here. Do not rush to get into the market. Just give yourself time, pay attention to what the market is doing. Then from this area here, the market has been consolidating, so it failed to break at this level. From here, it got rejected, and then if you can see well that the market has been playing around this area, which it was consolidating. So once the market breaks below the key area here, we can look for the increase, because now the market has been rejecting this key area here. So once it breaks here, you can just bring the risk reward ratio tool, and don't forget to set up your stop loss few pips above the key areas. In case the market comes back, it will not take you out. You have the room for your stop loss. The risk reward ratio we are targeting is 1:2. And that's it for today, guys. Now you know how to set a stop loss and take profits using the key areas. If you find the video helpful, please give it a thumbs up, and don't forget to subscribe to our channel for more trading tips and strategies. If you have any questions or suggestions for the future topics, drop them in the comments below, and I thank you very much for watching the video. As always, I wish you a happy trading journey. Until we meet again on the next video.